Okay, so now we're on to question 12. Question 12 says prepare the journal entry to transfer costs from finished goods to cost of goods sold. So we're going to move the amount of the $42,400 out of finished goods with a credit to finished goods and a debit to cost of goods sold for $42,400. Okay. Question 13, what is the amount of underapplied or overapplied overhead? Now, remember, way at the beginning, we were given that the estimated manufacturing overhead was $12,500. Or excuse me, not the estimated, but the actual amount of manufacturing overhead that we were incurred was $12,500. Now, we applied to this job $11,400 worth of manufacturing overhead. So, does that mean that we overapplied or underapplied? If our actuals was $12,500 and we applied $11,400, so we underapplied by $1,100 because the amount that we applied was less than our actual. And again, we based that predetermined rate on an estimate. We really had no, and this is very common with manufacturing companies. You kind of, you'll set up a budget, which is what the next chapter is all about. You'll set up a budget. You'll base your manufacturing overhead on the amount of overhead that you're going to have to incur to make your production budget. And again, these are all estimates. And then as the year progresses, once you get into the fiscal year and you start incurring actual costs, you're going to compare what you had budgeted for to what you actually incurred. And as you manufacture, you will record based on your estimate, but you still have to recognize the actual expenses that you incurred. And so that shortfall between what you estimated and what you actually incurred, you have to recognize. So that's because we underapplied by $1,100. We are now going to debit cost of goods sold, so that's going to increase our cost of goods sold amount by $11,100, and we're going to clear it out of the manufacturing overhead account where we're accumulating all the manufacturing overhead costs. Okay, so finally it says, okay, so let's say job P, we sold the 20 units, which had specified at the beginning of the problem for $3,000 each, and the selling and administrative expenses related to those sales were $14,000. Let's show an income statement for that sale, basically. Okay, so let's see here. I'm going to shorten some of this so that we can bring. I apologize for a little bit of formatting. So I want you guys to be able to see these numbers because, well, you know what I'll do? I'll actually just shrink this. There we go. So here we go. We've got our sales of $60,000. And you might ask, well, how do we get $60,000? That's the 20 units times $3,000 per unit. So that's 60. We know that our cost of goods sold was $43,500 because we know our unadjusted cost of goods sold was $42,400. And then we had to expense the $11,100 of actual manufacturing overhead that we did not apply to this job. So that's $43,500 total of cost of goods sold, leaving us a gross margin of $16,500. We had selling and administrative expenses of $14,000, and that means we made $2,500 off of the job. Now, just to kind of give you an idea of how much profit that is. The reason why this is not coming out is because these are not numbers. There we go. So that means we made a 4% profit off of the job, 4.2%. You might ask, well, is that good? And the answer to that is I don't know. The reason why I don't know, and I'm trying to skirt the question, is you really have to compare this to other jobs that the company has done. Maybe other jobs, if the other jobs are able to generate a 10% net operating income, then this job is lower in profitability. If all the other jobs, bring them about 4% net operating income, then it's actually pretty good. So each industry is different. Each product that they manufacture is different. Each product the company manufactures is different. So it just kind of varies from industry to industry and product to product. So you can't just in and of itself say 4% is a lousy operating income percentage, or that it's a great operating income percentage, because it just depends. You could look at Apple's financial statements and see that their profit margin is quite significant. Their gross margin is 40%, which actually is fairly normal for most manufacturing companies, but I believe their selling and administrative expenses is only about 20%, leaving them with about maybe 15. I think their SG&A is about 20 to 25%, leaving their net operating income somewhere between 15 and 20%. So that's just Apple, though, right? I mean, clearly they're one of the most profitable companies in the world, but not all manufacturing companies can be like Apple. And so it's not always a good comparison to make. You want to look at similar products, similar industries, okay? So anyway, that's the Foundational 15 for Chapter 2. I think most of you did well on this assignment, on these sets of assignments for this chapter, so I'm pretty sure that everything I went over wasn't a huge struggle for most of you, but hopefully you got little bits of little nuggets of information that might be helpful in clarifying how you get to some of the results that you need to get to. So anyway, hopefully these screencasts are worthwhile. Please give me some feedback. They will get better as I do them, and so I appreciate your patience with me. But again, if you have any questions about them, feel free to respond to a discussion thread, in which I will post these screenshots or these screencasts, and then I'll answer those questions as soon as I can and incorporate your feedback into future screencasts. So anyway, thank you for your time, and in total I think this is taking about 38 to 40 minutes, so they'll probably all be around that same length. All right, have a great week, and I look forward to talking to you later. Take care. Bye.